Good morning, everyone, and welcome to Thursday morning. It's Stephen Whiteside here from the uptrend.com. In the pre-market this morning, things are fairly quiet. We don't have any U.S. activity today. We do have some electronic trading. It's very thinly traded. We've got stock index futures slightly above fair value. We also have commodities slightly above fair value on Thursday morning. So no U.S. trading, and typically we take the day off and walk away from the markets. You'll find that most of Bay Street will be off today, as well as nobody wants to trade without the adult supervision of the U.S. market. It's always better to be in sync with the U.S. market than to trade against it. Just a reminder, we've got a Black Friday sale going on. And of course, unlike other Black Friday sales, this could benefit you dramatically in 2025, as opposed to that new coat or that set of boots that you're going to buy on sale this week during everybody else's Black Friday sale. So if you're not currently a member, you can save 30% using the coupon code Black Friday. If you are a member, you can upgrade your subscription from a monthly to a yearly, or a yearly to a 5-year, and save 30%, and also will refund you whatever outstanding balance you have on your current membership. Now, yesterday was all about big cap tech stocks falling out of the sky, whether it was Dell or HP or Autodesk or HP Enterprises or NetApp. They all moved down sharply yesterday. That put downward pressure on all the technology ETFs. So the S&P technology ETF was the biggest loser in percentage terms yesterday. It's still on a buy signal. That would change on Friday with a close below $230.88. You can see that depending on what semiconductor ETF you're following, one is already on a sell signal, one is still on a buy signal. So it's all depends on the ETF that you're tracking. Then the Magnificent 7 ETF in the channel, still no change in trend there. That would change on Friday with a close below $50.70. Then looking at the NASDAQ 100 ETF, it's still holding above 500. It is still on a buy signal. That would change on Friday with a close below $500.55. Remember, Friday is a holiday shortened day, so not expecting a lot of activity on Friday. Now, while we watch the NASDAQ 100 ETF try to hold the $500 level, we're still trying to get the S&P 500 ETF to get up and over the $600 level. So yesterday got as high as $600.85 before pulling back, dropping down $2. And so that is still a wall of resistance for the market. We're waiting to see if we can punch through it. Now, the equal weighted S&P 500 did punch through and made new highs this week. And it's stuck up here at the moment. So small pullback yesterday, no change there. Now, we recently talked about the big sell-off in biotech and healthcare stocks. They have come back sharply over the past week or two. Notice that the top was a bearish reversal day, the bottom was a bullish reversal day, and we ran down, tagged a target, moved up, and ran back up to a big round number. Stopped at $100 yesterday, closed at $100 even. So that big round number is currently holding us in check. Now, yesterday we had a whole bunch of bearish reversal signals, including for the Dow ETF itself. And what's important to remember, though, is when you're looking at the bullish and bearish reversal signals, what happened relative to the previous day. So yes, we made a new high, pulled back, we opened higher, closed lower, didn't close below the previous day's low. So far, this signal is not that significant. If we close below the previous day's low, then I would say there was more aggressive selling, and we should be quite concerned. But so far, nothing has really happened. So we're going to be watching to see if we get fall through to the downside on Friday. If we do, then we could be marking a top for this particular move. And when I say this particular move, here was the last move. And so here we are. I'm not saying it's the top for 2024, or, it's a significant top of any type. It's, markets go up, markets go down. A trend or a trade is usually about 2 weeks. And we'll just have to see what happens on Friday if we do get more downward pressure. Now, we've been watching Bitcoin try to break through 100,000. It turned around yesterday, so the futures contract moved up from the channel. We also saw the major ETFs on both sides of the border move up out of the channel as well. It's mixed this morning. It's been up and down, but it's really not going too far on Thursday morning with the U.S. markets closed for the day. Looking at the world of currencies, the US dollar index rolled over yesterday and money went back into the Japanese yen, into the euro, into the Canadian dollar, and into the Mexican peso. So, a little bit of pressure taken off all the other currencies yesterday with the US dollar index moving down. Now, looking at the bond market, money's been coming back into bonds this week. So the 30-year bond has moved up, bond yields have moved down. We've seen money go back into the TLT and north of the border on in the XBB. When I talk about bond prices, I'm talking about the movement of money and what big money is doing. If they're scared, if interest rates are going up or down, which puts pressure on the rest of the market, these are certainly not items that you want to trade. There are people out there trading them and using them, and they're not using them as a stock replacement. They're using them for other purposes. If we look at the average true range on the XBB, it's just a tick over 0.5%, which is less than half of the movement of the overall stock market. Now compare that to the most actively traded Canadian stock on Wednesday. That was Suncor with an average true range of 2.27%. So there's a lot more opportunity to make capital gains and to make any money at all trading a stock over trading any bond ETF. There's a purpose, a place for the bond ETFs, but it's not an item that we want to be trading on a regular basis. I follow bonds to watch where money is going, to see what's happening with interest rates. And the bond market is much bigger than the stock market. It is the adult supervision in the financial world, and we need to keep an eye on it just to see what's going on. A lot of times, when investors get scared of the stock market, they'll run into the bond market, and that's something I like to keep an eye on. Now, moving on to the Canadian market, and when we look at this little graphic, it shows how big individual companies are on the TSX. Shopify certainly stands out in the middle here, but I just want you to focus on the top left-hand corner. These are all banks and financial institutions. You've got Manulife, Sun Life, TD, Royal. So there's a huge wall of money up in this corner. And as long as they hold up, then if all of these little companies down here fall apart, you may not notice it. And there's a lot of that going on right now. And so if the financial sector, especially the banks, continue to hold up, then, there's no problem for the TSX. There's the Vanguard Canada ETF or the iShares for the TSX 60, both making new highs this week. So it's important that those banks continue to hold up. There's a lot of stocks that look something like this. And of course, they're not really going to get noticed or have much effect on the overall Canadian stock market. Now, the telecom sector has been in the doghouse for a while now, and at some point, the market is going to say that these stocks are fairly priced and it's time and place to get back into them. I don't know when that's going to happen. It may happen soon, may not happen till the new year, but they have been very beaten down, being led lower by BCE. If you look at this monthly chart, you can see BCE peaked in early 2022 up at $75 and has lost 50% of its value. Now, if it's lost 50% of its value, that means it has to go up 100% to get back to where it was in early 2022. That is not likely to happen. But let's say that we had a move up to these lows from back in 2018. And so, that wouldn't be too bad in percentage terms if we went back up to, say, the $55 level. And let's just use the $50 level as a big round number for BCE to go from 37 to 50. That would not be a bad investment at all. It hasn't started yet. It may not start anytime soon, but it's just something to keep in the back of your mind. Looking at daily charts, the market doesn't hate Cogeco too much. It's kind of interested in Quebecor at the moment. There's some interest for Rogers. Rogers has been trading in the channel a lot over the past few weeks, not enough to give us a buy signal, unlike TELUS, which is back on a buy signal as of Wednesday's close. Now, it's a very weak buy signal, but it is what it is. Now, who loves what? If we look at the pros and the public, you can see for BCE, the pros are not that interested in grabbing BCE at the moment. Now, BCE could generate a buy signal. The pros could come in after that. I remember it takes a while for the pros to get into a position. They can't take a full position at one time. They usually have to spread it out over a few days. Looking at Cogeco, they're kind of indifferent on the stock. They don't love it. They don't hate it. So they're just waiting for something to happen, probably, somebody to buy it. And then we've got Quebec Corp. It looks like all the selling pressure has come off, and there's some interest in getting back into this stock. There's a little more interest in both Rogers and TELUS at the moment. The pros haven't committed just yet, but it looks like they've probably finished selling for the time being. And so just something to keep an eye on. If you're interested in telecom stocks, this might be the time and place where things start to turn around. Let's finish off looking at the world of gold and gold stocks. There's the price of gold on a daily chart. It came down to the bottom of the panic zones, pressure zone form. This is the time and place we look for buy signal. We ran up 2 lines, stopped, pulled back. So we're in the middle of the range for the past couple of weeks, looking to see where we can go next. We're on a buy signal right now, and not expecting much movement in the price of gold on Thursday. Now, a big red flag for me is the fact that we just recently put in a lower high and a lower low. Now, that pattern, of course, can be broken. There's nothing written in stone here, but if we take out the recent low, then $2,500 would certainly be our next target to the downside and an omen. And of course, if we can take out that recent high, then a move up to 28,1250 again would certainly be in the cards. Now, here's a monthly chart of the price of gold. Here's a monthly chart of the price of Barrick. Do you notice a difference? Gold is peaking right now, while Barrick peaked back in 2020. That's 4 years ago. And in 4 years, the price of gold has kept moving up. Remember, they're two completely different things. This is the price of a finished product sitting in a warehouse. This is the price of a stock that is trying to create more gold. They have a lot more things going on. They have costs, they have opportunities, they have risks. There's a lot of stuff going on: transportation costs, energy costs, the cost of money. And so it is, of course, interesting to want to be in the gold sector when the price of gold is moving up, because that can certainly help, but is not the be all and end all of the value of your particular stock. So don't get too attached to the price of gold if your gold stock is moving in the opposite direction. Now, here's the iShares for the TSX Gold Index, and you can see that we recently ran up to fill the open gap and then pulled back. And so now we're waiting for some direction from the market. It may take the price of gold moving up, who knows? But right now we are currently on a buy signal. Now, when we walk through the individual stocks, Barrick and Agnico Eagle, of course, are the two biggest ones, and they're going to have the most weighting on this particular ETF. You can see when we compare Barrick to Agnico Eagle, the market likes an Agnico Eagle a lot more, and that has been an ongoing issue for some time. Now, you can look at the top right-hand corner of the screen. You can look at the bottom right-hand corner of the screen. The stocks that are closer to the top right-hand corner are the ones the market loves. And of course, the stocks at the bottom right-hand corner of the screen are the stocks that the market does not like. And so as we go through these, you can see that there's a lot more love for IAMGOLD. There's a lot more love for Kinross. There's certainly a lot more love for OceanaGold, which recently put in a new high up there. And then Torex, there's a lot more interest in that. So if you didn't get these particular stocks, the ones that are winning at the moment, then wait for the next cycle where we pull back and then get back on a new buy signal, and focus on the ones that the market loves and leaves the ones that are down at the bottom of the screen. Leave those behind for some time until those particular stocks get to work their issues out. Okay, folks, that is all for this morning's presentation. It's going to be a very quiet day. Most of Bay Street will be off walking the streets. They're probably not playing golf today. They're probably at home playing Nintendo or something, but they're certainly not going to be working today. There's not going to be much to do at all. You have a great day. If you're south of the border, have a wonderful Thanksgiving. Of course, you don't have to be south of the border to have a wonderful Thanksgiving. Lots of Americans are here, and lots of restaurants are having traditional Thanksgiving dinners today. So go out, have fun, and next time you'll hear my voice is on Friday morning. And at that time, we'll walk through the most actively traded stocks from both sides of the border.